Welcome to Leaders in Lending. I'm your host, Jeff Keltner. Today, I don't have a guest, but I want to share with you a couple of thoughts based on many ongoing conversations I've had, both in this podcast and in my regular conversations with a variety of financial institutions, about a couple of topics that are kind of repeat discussions, things that seem to come up over and over. I was struck by this theme in my recent episode with Vince Passione from Linkey when he said, how do you show me that you know me? And it really got me thinking. One of the through lines of every conversation I have with financial institutions is the question of relationships and trust and the relationship that's built between the FI and the consumer. And I think the question that many financial institutions have is, how do we transition that trust, that loyalty, that relationship from a world where that was based on person-to-person relationships in a singular physical branch into a digital world? And I've really spent a lot of time thinking about this topic. And I want to share with you my perspective on what I think it takes to earn that kind of trust and loyalty in a digital age, and then what kind of investments institutions ought to be making to enable that for their customers. So in my mind, as opposed to kind of what I'll call real estate and relationship individuals, I think there's really three things that an institution needs to be able to offer their customers to earn loyalty. One is good, two is better. If you can offer all three, that's kind of the best. But I think those three things are, can I offer you better rates on the products, right? Can I offer you better processes? As Mark Pregman said in our episode, you need to make things fast, easy, simple. Can I do that better as your existing relationship financial institution? And third, can I give you better advice, better offers? And one of the other kind of through lines in this was, how do we leverage our relationship to proactively position things to customers? And I think Jim Deitch in our episode, when I talked to him, said, how do you grasp the customer's whole balance sheet and make the right advice and products available to them? So I think those are the three things an institution needs to focus on delivering to their customers if they want to earn the right to not only have one product with that customer, but multiple product relationships, better rates on the products they offer, better processes and how they can go through that experience, and better advice on products you might not be thinking about or which products are a great fit for you. And I'm going to use as an example my recent experience personally refinancing my mortgage. And I think it's a very illustrative of all these points. So I'll kind of walk through the experience and tell you where I think things fell down. And then when I finish that, I want to kind of talk through the investments I think you can be making now to enable these kinds of capabilities and experiences for your customers. All right. So a couple of years ago, I bought a house. I'm working in it now. And I got a mortgage, and I actually rate shopped. So number one, can you give me a better rate? And I found that an online lender could give me a better rate than my current banking institution, and I was willing to take that. So, and to my bank's credit, they said, "Hey, Jeff, we can't match that rate. You should take it." But a couple of years later, they called me and said, "Hey, Jeff, rates have come down. We think we can refinance you at a lower rate." And so, better rates. Good job. Good advice. They called me. So that was great. But there, the experience started to go off the rails a little bit. Right. So, the bank says, I said, "Hey, I'd be interested in understanding what my rate could be and how much money I could save. Let's do this thing. Let's try it out." So I said, great. And they emailed me a digital application. Best in class, recently revamped digital experience. Good start. And of course, the first thing that the form asks me is, what's your name? Where do you live? And I said, well, I live in a house and I'm trying to refinance. So all this information that an institution I had been banking with for a number of years had about me was not represented to me, right? And so my experience was now slow. I was typing in all this information that they had. What's your annual income, right? So now the process wasn't great. Not only did they not pre-fill information, but then when it came to documentation, I was asked to upload a driver's license. Well, you've already done KYC on me. I already have, my investments with you, my checking account with you. I was asked to upload a bunch of pay stubs and information on my wife's S Corp and all this information that wasn't really relevant, and much of which the institution already had or could have determined from the information they had. You don't need my bank statements. You're my bank. You can just look at those information, but that wasn't that easily available, right? And so all of a sudden, I'm in a world where I'm going through a process that looks like the process for an institution with which I don't have a relationship. So didn't deliver on a better process. And then as we're getting through the process, I kind of asked them, I said, well, I know a lot of people get a HELOC along with their mortgage for liquidity issues. Like, hey, can I get a HELOC too? And they said, oh, I guess you could do that. So they missed the opportunity to actually advise me that when you're getting a new mortgage, we can get you a HELOC too. And they said, let's finish the mortgage and talk about it. Okay. So we finished the mortgage, and I go, well, how about the HELOC? They didn't follow up. I did. And they said, oh, here's the application. And if you want to guess how it experienced it, it looked a lot like my mortgage application. What's your name? Where do you live? What's your income? All the questions I had just finished filling out in a process that I thought was too painful. And 2 days later, to get a related product, a HELOC on the same house that I'm, getting the mortgage on, it was like I had never interacted with the institution before, right? And that's the kind of experience that I think too often is being delivered to our consumers, and it results in a lack of loyalty. And so I think you can see there, maybe they got better rates, but they didn't deliver on a better process. They didn't deliver on a better rate in the original mortgage. They didn't deliver on better advice and helping me make smart choices. And because of that, while I got my mortgage there, I didn't get the HELOC, and I'm not, really going to leverage that institution probably for other products going forward because I was kind of unimpressed with the experience. And so I think that's illustrative of the kinds of experiences that many institutions are able to deliver to their consumers today. And I think that's the challenge, is in a world where you're walking into the branch and you're talking to a person that experience is maybe okay because your loyalty isn't based on that simplicity of experience. But in a world where I can rate shop on LendingTree for mortgages, in a world where anybody can give me a digital process in my home, right, whether they know me or not, then I need to actually deliver better in that digital experience than another player in order to earn repeat business from a customer. And I think that's the thing that we're seeing. So of course, the natural question becomes, if I want to do this, what are the kinds of investments I need to make or decisions I need to take in order to enable those kinds of experiences? And that's a really interesting question. And I like threes. So I've got 3 pieces of advice that I think are really relevant to the question of how do you invest in the technology and the infrastructure to enable you to deliver on these 3 core capabilities to earn loyalty: better rates, better processes, better advice, and proactive offers, right? And so let me go through these 3 things that I think every financial institution ought to be thinking about as they build out their roadmap for how do I enable a digital experience. So number 1, I think the natural inclination for many, and you can see this in that mortgage process I went through, is to digitize your current process. It's digital now because I asked you for the same 25 documents, but I asked them for you in a web page as opposed to in physical form in a branch. And now it's digital. But the reality is much of the information that I was being asked for, or that you need from any consumer in the context of a loan application or any kind of account application, really is either information that is available digitally through a simpler method than uploading a document, ID verification, income verification. These things can be done with a variety of behind-the-scenes services and not take a picture of your driver's license or upload a PDF of your bank statements. You can simplify that experience a lot if you think about starting from scratch. 2 simple examples, I think, are using interconnected services like Plaid to look at bank account transactions, using your own interconnectivity to your existing depository system if that customer has a relationship with you, to mean that we don't have to ask the customer to walk away from the computer, go grab a document or go to another website and download a PDF and re-upload it. That process has a ton of friction and it results in a lot of customers not completing the process. And so the more we can keep them in that session and design a process that understands what's capable on that technology layer, the better off we're going to be. Another good example is not digitizing. Maybe your current process has a hard pull up front. That's not standard in the digital world. And if you digitize that process, as opposed to thinking about in the context of an online application, what is the right process that I should build for this particular product, I think you're going to leave a lot of opportunity on the table in terms of the value you can deliver for customers and how well you can make that process work. And so I think really thinking from what we'll call first principles, my conversation with a number of people on this podcast, I've talked about putting the customer in the middle of your conversation. So really got to start with that question of what does the customer's process need to look like? If I'm the customer walking into this experience, what would I expect? And what could we do? Not what is my technology limitations or what is my existing process or my existing requirements from a credit committee, but rethink those things and ask the question, what's the best experience I can build for that customer? And if you start with that customer in mind and building the ideal experience for them, then I think you'll get to a very different place in saying, how do I take what I do today and pull it online? And unfortunately, if you do the latter, you often end up with a very hard road to go and actually improve those processes, because it's a lot of infrastructure gets laid and it's harder to change it, kind of like the plumbing in your house. Once you put the walls up, man, it's hard to change. And so doing that right the first time makes a ton of difference. The second piece of advice I have is related, which is you really need to focus on best-in-class experiences for the individual offerings that you have. And this is a tough one, and I commiserate with financial institutions because it's a difficult decision on, do I want to have 50 providers on the technology side that each focus on one little thing, or do I want to have one throat to choke, one partner who can kind of do it all? And it's a delicate balance. But I'll just say that in the digital experience, there's a huge difference between okay and really optimized for this product. And often when we have a vendor who tries to be a loan origination system for all kinds of loans, as an example, they're going to use the same process for each. But of course, the process you need for an unsecured loan or a HELOC or a mortgage or a car loan are very different. In building an optimized auto lending experience that integrates into DMVs to identify vehicles maybe without asking for a VIN, versus building a mortgage product that maybe can tie into automated appraisal systems and valuation systems, or building an unsecured system that maybe wants to be totally automated because you don't have those kinds of security requirements to look at collateral. Those are very different experiences. And I think at least today, most of the monolithic vendors don't have highly optimized experiences in each of those asset class areas. And so when you go with a single solution, again, you're kind of starting with the institution's needs and capabilities in mind, and not as much with what's going to deliver the best experience for the consumer. And ultimately, it's that best experience for the consumer that drives loyalty, that drives retention, that drives repeat transactions with an institution, right? That drives trust. And so if you're focusing on the trust, you really have to, again, put that customer at the middle of your debates, of your conversations, of your planning, and figure out, how do I deliver the best experience? And that should drive the decision. If that's a single vendor, awesome. But really, you have to make that decision with, what can I do to deliver the best experience for the consumer, for my customer? And what are the places, the pieces, parts, the partners that enable me to do that? And I think often you'll find that is not a single solution, but it's going to be a couple, right? It's going to be a couple of solutions, but each of those solutions are so much better at what they do, that it's better to have those than a singular. And again, I know this is a tough decision. There are real limitations for every institution in terms of the number of partnerships they can manage, the technology they can integrate. But I think it's easy to underestimate the value of a highly optimized solution. And the more you can think about getting to that optimized solution for each product that's important to you, the better you're going to deliver on that promise to your customer, right? The better you're going to show them that you know them. And the third area I think that is really important to invest in, and I think this is something that's, we'll call it below the waterline in many instances. And so it's easy to kind of forget or neglect or get left behind as you're thinking about the consumer-facing applications. I'm going to get a brand new mortgage origination or auto loan origination or personal loan or small business origination or commercial real estate, is what I'll call the connective tissue between these systems. Because just like my experience in the mortgage, it's great if I've got a highly optimized experience. I wouldn't argue that was, but a highly optimized experience. But if I walk into that highly optimized experience and can't bring in all the information that I have about you as a customer into that experience, if I can't not ask you your name and your date of birth and your address because I know those things, then I'm underutilizing my ability to really provide value to my customers and to show them that I know them, to highlight and simplify the process for them, but also to highlight for them the relationship that we have and the trust that's been built, and my ability as your current partner in your financial institution to actually deliver a better experience. And so investing in, how do I take the data that's being generated in any individual system, be it a core system, a CRM system, a loan origination system, right? And make that data available both to other systems, right? So I can pre-populate an application. I can have a CRM that I'm running data marketing on and to do proactive offers that understands the current products that you have. All those things are super valuable. And I need to make those connected to not only other systems, but also, really importantly, make them available to my teammates in the places they are, so that when I walk into a branch or I call a call center, or I open up my mobile phone and I'm talking to a person or interacting with a different system, that it has a complete picture of the relationship I have with the institution, whether that's for underwriting purposes, right? To understand how I can better underwrite your risk because of the relationship we have and the information I have about your repayment on current loans that you have, your depository behavior, the investments that you have at my institution. Those help me better understand risk, give you a better rate, simplify your process. I shouldn't be asking about those. I know them. I've got to make sure that that information is available to those systems, but also available to your team members, right? That your team members, your call center employees, your branch employees can actually reflect all the things you know about that customer in their conversations, the number of loans they have, the investments that they have, the checking account that they have. They can look at that and actually understand the complete picture. And I think my kind of last point on this is one of the other through lines. I talked about this with Rob Pirelli and Kathy Myers in our episodes, is kind of the evolving value of the high touch experience, of the person to person human interaction experience that we can deliver. And I think that is still incredibly valuable, but it's shifting in how we want those employees to operate, because now so much of the processing, transactional information, I'm check my balance, I want to deposit a check, I want to apply for a product, I need to provide an ID or provide some information. Those things can be done in a digital and an automated way. We want to make it possible maybe to do that in person, but most consumers are actually opting to leverage their phones to do it from their couch at home. They're very fine transacting in a digital way without a human interaction. But when it comes time to say, hey, why do I want a HELOC to go with my mortgage? How should I think about how I'm investing my finances? Should I roll my 401k into an IRA when I leave my employer or not? How do I think about a money market account versus money in my checking account? How do I plan for retirement? What term do I want on my mortgage? And what is this ARM and IO? And I don't understand. What are my options? Our consumers need us to help them navigate that world of financial offerings, of financial products. And when we offload the transactional, the administrative, the processing burden from those employees, we open up the opportunity for those employees to really engage in deeper, more advisory type conversations with the client. But to do that well, they need access to this complete picture, this 365 view of your consumer. And I really do think that the winning players in the financial institution world in the future won't be those that are fully automated, pure digital, nobody to talk to. All of us, myself included, have moments where I just want to call somebody and ask a couple of questions so I understand that I'm making a good choice in what I'm doing here, whether it's refinancing a mortgage or investing for retirement or financing a new vehicle, whatever it is. There are moments where I go, I just don't understand my options and I want to call somebody and have that conversation. And so enabling your team to do that, in part by training them to do it, in part by enabling them with the data that they need to be able to have a full picture of that customer and give the best advice possible, and also enabling them with the data about what that customer's already doing. I think that is the moment when you're adding the most value, where you're leveraging those people resources in the most value-added way, and you're doing it because of the technology investments you've been able to make, the infrastructure you've built that's offloaded some of that work so that your employees can do it. And the great thing is you find not only are customers happier when they can call in and say, hey, I need some advice and get good advice. Employees are happier when that's the thing that they're doing. It's a much higher value added activity for them. They enjoy it much more. And I think, while this was really a discussion about my advice around, investing in digital loyalty, I think loyalty will still be earned in part by being able to provide that human touch, that high quality advice. And your investments in digital aren't really opposed to that. They're working in conjunction with that. They're part of how you deliver that high quality, high touch experience in the call center, in the branch, on a text, whatever the mode may be. But it's done because you've made the right investments in that data connectivity tissue. You've provided the best experiences to automate the transactional parts, right? You've really optimized that experience. And now your staff and your customers can leverage the more expensive, but maybe higher value added time of person-to-person interaction to have those really advisory conversations. So that's my advice. To sum it up, if you've made it this far, I appreciate it. But I think for those who are looking to earn loyalty in the next stage, you've really got to focus on how do I offer better quality products, better rates to my consumers? How do I offer better, simpler experiences to consumers because of the information I have about them, right? And how do I offer them better advice? Maybe tell them when they can refinance a mortgage or an auto loan or credit cards in a personal loan. How do I give them the best advice they can possibly have? And to enable that, you really have to invest in key technologies in 3 areas, starting from first principles on customer experiences and not just digitizing the processes you have, investing in making sure you're getting the right experiences for each product you're going to offer and not kind of peanut buttering over with a singular solution that's not that good for each, because you really have to have optimized solutions for each kind of product, and then making sure you have that data connectivity tissue that brings all those systems, and importantly, the systems and experiences together so that you can deliver not only the best digital experiences, but the best human experiences to your customers as well. And I think the institutions that are able to do those things are going to be the real winners in the future.